Futures are down once again. What do you think this is, despite all the assurances from the U.S. government? So is this markets really just trying to force the Fed's hand and, getting that 50 basis points rate hike down to 25 or maybe even 0 next week?
Yeah, the market is jittery. We have seen rates, of course, go one way and then completely the other way. I think overall, though, the market has calmed down a little bit. They realize that SVB, the Silicon Valley Bank, is not a systemic threat. They realize that the Fed, the FDIC, has done just about everything it can. And also they must realize that there's a separation here between monetary policy and particularly policy setting of rates, so your policy rate, and actually financial stability. So if you look at the program the Fed's put into place, where you can pledge collateral at par, the mark-to-market has been suspended, that should be sufficient for the moment. And even if it's not, and there's another bank that comes into trouble there, another mid-sized lender, they could just up that program. The question really is, with inflation still at a multiple of where the target of the Fed is this a hill they want to reverse on? Because then inflation will really become entrenched. So in our mind, they are still solidly on course to at least do 25 basis points. CPI and employment report also suggest as much. And they will keep an eye on this, but there's other tools to deal with this. And it should also be a situation that is relatively contained, as SVB and a couple of the other lenders are a unique proposition, but risks that simply aren't present in systemically important banks.
Jan, what are your clients doing? Are they looking to sell the U.S. markets even after the kind of fall that we've seen? Or do you think now they're saying the fall has been a bit excessive, let's wait it out? What's happening on the flows front?
If you look sort of at the past couple of days, we've had both a massive move on one side and then a massive reversal on the other side. So it's clearly that in the markets, people were nervous initially, trying to figure this out. There is some talks more high on the horse about what does this do to moral hazard, et cetera, but there's also a dawning realization that this probably means the Fed and also the ECB are still on course to tighten policy rates, as just should be seen as more or less divorced from the SVB situation. It's never as simple because there are always question marks, you never know, but that seems to be the leading thought here. And if we take it to Europe for a moment, of course we have the ECB tomorrow. Yeah, there's growing evidence they will just go to 50 basis points. Of course, the doves will discuss this, they'll use this as an argument, but probably the hawks will win the day here still. Go ahead on the 50 basis points. Bearing in mind, inflation is still uncomfortably high, and bearing in mind, of course, that the European banking sector is very differently organized. And while there may be some weak links there that are worth watching, it isn't such that SVB transfers over one-on-one.
Jan, though even if they hike, right, on by 25 basis point in March, that of course is tightening, so markets may not like it. But if they don't hike and in a way give in to the current fragile situation, the markets might kind of make it to be about how bad the situation is, that they kind of abandoned what they've said they'll do, which is not stop till inflation gets under control. So in a way, give up midway because things are so bad. Is that a fair assessment, or you think, I mean, they can achieve not hiking, doing nothing, and pleasing the market as well?
Yeah, I think you're spot on with your first part of your assessment there. Inflation is still a multiple, both for the ECB, but also for the Fed. When they look at their domestic economies, inflation is at a multiple of where their targets are. They have been late to the game. They are now catching up. They've decided that rebuilding their, keeping inflation expectation under control and rebuilding their credibility is key. They're willing to risk or even have a recession over that. Of course, financial stability is something to take into account, but it shouldn't depend on this latest policy hikes. It will be dealt with other instruments like that fund and other instruments they can come up if need be. It's just not the hill they want to reverse on. It will be hard to see. And the next risk would be that if they were to suddenly pause or suddenly reverse, people are going to ask, what do they know that we don't? Right? I mean, you're telling us this is under control, but you're taking some sudden reversal, a complete divergence from the path you previously were on. I think Keynes said, when the facts change, I change my mind. What would you do? So obviously SVB is a new fact. At the same time, they got the tools to deal with that. Any other step, a pause or reversal, smacks of panic that would be counterproductive to the narrative that this is under control and contained.
Jan, we'll leave it at that. Thank you very much for joining in. That's the view coming in on Rabobank for the market.